Shares of Meta Platforms absolutely rocketing higher, nearly 14.5%, all the way up to $450 a share. We'll take a look at their Q4 results, which came out after the bell, and spoiler alert, they were absolutely fantastic, both from this most recent Q4, and also we'll take a look at the Q1 commentary made by the CFO. Those results also coming in ahead of Wall Street expectations. We'll take a look at the earnings estimates. We'll take a look at the news that came out along with this Q4 results. We'll break it down from the segments, the all-important Reality Lab segment, that revenues continuing to chug along, but the operating losses in that segment also piling on. But it really doesn't matter, as advertising really had an insanely strong quarter. We'll get into those revenues. We'll also take a look at it from a daily active people perspective. When people say no one is using Facebook, no one is using Instagram, well, they have to come in here and take a look at this report by Meta because the numbers say otherwise. We'll jump into all of the P&Ls, and then as always, we'll take a look at it from a chart perspective. This one is basically just making a straight rocket ship higher in the after hours. We'll see where you can come in here and pick up shares of Meta from a technical perspective. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. That's all I ask for, and that would be much appreciated. Time to jump into the shares of Meta Platforms. Yeah, this after hours move is not a mistake. It is up 14.5%. And in my opinion, for the right reasons. Revenues in this Q4 coming in at $40.11 billion. That was good for nearly 25% growth year over year, ahead of Wall Street estimates by roughly $940 million. Guys, the high end estimate on Wall Street from 43 analysts was at $40 billion. Meta coming in ahead of that at $40.11 billion. Even on the bottom line, GAAP EPS coming in at $5.33. That beat estimates by roughly 39 cents. The high estimate was closer to $5.41. So Meta not really beating on the high estimate, but coming in just a few cents shy of that. So a beat on both the top line and the bottom line in this most recent Q4. Full year revenues coming in just shy of $135 billion. Keep in mind, this company now valued close to $1 trillion, exactly at $1 trillion. Likely will be up roughly around $150 billion tomorrow if these after hour gains hold. But keep in mind, this company valued at $1 trillion just posted a full year of roughly $135 billion in terms of top line sales. So trading somewhere between 8 and 9 times on a trailing 12-month sales basis. Now, from the CFO, we got outlook commentary for first quarter 2024, which is the current quarter we're in. They are expecting total revenues to be in the range of $34.5 up to $37 billion. The average estimate on Wall Street coming in underneath that at $33.87 billion. The high estimate was at $35.68. So basically at Meta's midpoint was the analyst high estimate on Wall Street. So again, Meta coming in with not just a beat on revenues in Q4 and not just a beat on earnings in Q4. They're coming in and raising guidance, at least from the expectations of Wall Street. So that is basically a triple beat. That is what Wall Street loves to see. And then on top of that, they're not changing their full year 2024 expense guidance at 94 to 99 billion. That is unchanged from their prior outlook. That includes higher infrastructure related costs. We know Meta is making a big bet into AI, and those AI data centers and the data servers certainly aren't cheap. We'll take a look at exactly how they're going to do that in the upcoming year. They also expect some moderate growth in payroll expenses as they now work down from their current hiring underrun, and now they're looking to shift their workforce composition towards more higher cost technical roles. This is something I don't mind at Meta. Certainly they've done a fantastic job controlling costs over the past 1 year. The year of efficiency has proven to be extremely successful. Now they're looking to grow on those payroll and basically be more mindful of where they hire. I'm sure Meta won't hire absurdly like they once had in the past, and they're now going to look to hire more technical roles. And lastly, Reality Labs, they do still expect operating losses to increase meaningfully year over year. This is what they had said in the last earnings report, so shouldn't come as a real surprise to anyone. They did bump up the capex for the full year just a little bit, now up to 30 to 37 billion. Last quarter they had said it would be roughly 30 to 35 billion. So not a huge increase, just on the higher end, bumping that up by $2 billion. So all things looking good in this most recent quarter, looking good from a Q1 revenue guidance perspective. And as we saw, the $94 to $97 billion operating expenses, that is likely due to those higher chip spend Meta expects in the full year 2024. And now Meta is said to use custom in-house chips for AI. So this report came out today. Meta is reportedly going to use some custom processors it has created in-house, as it continues to look out to build its AI capabilities. And this year, the chips will later go into production that will be used within their data centers, citing an internal memo. And then the chips will work with existing GPUs that Meta already owns, namely from NVIDIA. They have roughly 350,000 of those NVIDIA H100 chips. That is by the end of 2024. And so when you see NVIDIA's revenues and operating income absolutely exploding, you know a company like Meta is definitely contributing to that. Meta also uses AMD's MI300 chips, and they have a ton of that. I think Meta is going down the correct path of starting to build out their custom in-house chips. We know Apple did this a few years ago. You take a look at Apple from really 2019, 2020. They ditched those Intel chips, started making their chips in-house. Not only did it save them costs, but it actually helped out their products become much, much better, as those chips are basically designed just for those Apple products. And Meta going down the same route, looking to build some chips in-house. I think that is the absolutely correct way to go about it if you are Meta. Now, Meta also initiating a quarterly dividend. Yeah, that is correct. For the first time ever, they declare a quarterly dividend of 50 cents a share. That is, again, on a quarterly basis, you analyze it out, it comes out to be $2 per share for the full year. That is a yield of roughly 0.5%, so not huge. But again, Meta going down the route of what Apple did a few years ago, starting to pay out a dividend. The other big tech that does this that comes to mind is Microsoft. Both these companies paying out dividends, and now Meta joining that boat, starting to pay out a dividend. In my opinion, I am a fan of this. Look, this just shows me Meta is reaching the point of becoming a mature business. That is what you do when you become a mature business. You have enough profitability to kind of go around. You have enough profitability to spend on your AI chips, to continue investing in your business. You still have enough profitability to continue spending and losing money on Reality Labs and the metaverse, which is Mark Zuckerberg's pet project. You have enough money to continue to do buybacks as they increase their buyback by roughly $50 billion in this most recent quarter. And then you have now still enough money to spit out a dividend to shareholders. So this, in my opinion, just shows good management from Mark Zuckerberg, that he's willing to not spend every possible dollar in his dream of the metaverse. He's willing to kind of control costs there and continue to use his free cash flow extremely well, investing in his business, investing back in the company in the form of buybacks, now paying out a dividend, and then continuing to invest in the metaverse. I think Meta has well enough free cash flow for all that to go around. When we take a look at the segment results, advertising revenues in this most recent Q4 coming in north of $38.7 billion. You look back at Q4 of last year coming in just ahead of $31 billion. And then even Q4 of 2021, it was just at 32.6. So this 38.7 number, an absolutely massive increase from really any quarter we have seen in the past. Total family of apps revenue coming in north of 39 billion. Even Reality Labs coming in north of $1 billion. You see Q4 of 2021, they were just at 870. And then Q4 of 2022, that declined down to 720. That is in millions of dollars. Now rising once again up to $1 billion. The Reality Labs segment, from an operating basis, still continuing to lose money. That is what Meta is saying it will continue to do meaningfully over the next year and probably over the next few years. But that is okay when your family of apps is generating north of $21 billion in operating income. Yeah, I think investors are absolutely okay with Mark Zuckerberg continuing to spend $4.6 billion from an operating perspective on his metaverse pet project. And that is also still with rising operating margins. You see operating margins coming in at 41%, highest from really any of the past 8 quarters. Even in 2021 in Q4, we were at just 37%. So even though Mark Zuckerberg continuing to spend on the metaverse, you have rising operating margins, you have rising operating income on your family of apps. And then of course you have an extremely strong advertising revenue number. And so this report just shows me the core over at Meta is still advertising. It is still very much intact. And there's really nothing bringing that down over at Meta. You see family daily active people rising at 3.19 billion people. That is across all of their apps, including Facebook, Messenger, Instagram, and WhatsApp. Again, highest number that we've seen over the past 8 quarters, coming in at a tremendous 3.19 billion on a daily perspective. From a monthly perspective, nearing 4 billion people using at least one of Meta's platforms over the past month. That is absolutely spectacular. Whoever says the apps over at Meta are not being used as much, people are not really using Facebook, Instagram, or they're getting their competition eaten out by TikTok, need to just come in here and take a look at the monthly and daily active people as that number continues to climb steadily quarter in and quarter out. Now, in terms of the statement of income, everything looking absolutely spectacular. As we looked at it, $40 billion worth of revenue. That is in 3 months. You annualize that over the last 12 months, north of $134.9 billion. And what's more impressive on top of that is they've been able to grow their revenues at a staggering clip while controlling costs and expenses. This was the year of efficiency over at Meta. And so when you see their stock price absolutely hit a trampoline in the end of 2022 and basically bounce right off of that, it's because they've been able to control these costs. You see cost of revenues in this most recent quarter coming down to $7.7 billion. Last year, you were sitting at $8.3 billion. R&D ticking up just a little bit, likely due to a higher spend, again, on that metaverse, on those AI chips. But you see marketing and sales coming down substantially, down to $3.2 billion. Last year, you were at $4.5 billion. And then G&A also coming down to 2.3. Last year, you were at close to 3.1. So all things considered, revenue is absolutely exploding. On top of that, you have extremely efficient cost measures and cost controls. And so your total operating costs coming down to 23.7. Last year, you were at 25.7. Even on a full year basis, not really budging all that much, even though you printed a ton more in top line revenues. And what that does is absolutely explodes their income from operations, now sitting at $16.3 billion. Again, this is for 3 months, bringing their net income line at just north of $14 billion. That is absolutely staggering. That is nearly a 3x from their net income same time last year. Yeah, from an EPS perspective, coming in at $5.33. Last year, you were at just $1.76. So again, when you see this stock absolutely fall off a cliff in 2022, hit a trampoline, and then basically make a V-line recovery back up to the top, that is because the numbers from 2022 to 2023 have done the exact same thing. They've made a basically V-line recovery back to the top, back to all-time highs, back to record revenues and record profitability. And on top of that, you have a company buying back shares and now looking to pay out a dividend. This company just executing on all cylinders, firing on all cylinders, and just maintaining their absolute dominance in the advertising space, which is honestly allowing Mark Zuckerberg to continue to spend on the metaverse. From a balance sheet perspective, sitting on over $41.8 billion worth of cash and cash equivalents. Last year, you were just at $14.6 billion. Total current assets coming in over $85 billion. You see property, plant, and equipment ticking up year over year pretty substantially. That is their investment in those AI chips, in those data centers. Certainly, if Meta wants to maintain a lead that they have in the AI space from a social media perspective, I think the investment into those data centers is absolutely the right call to make. Total current liabilities coming in at just $31.9 billion. They're sitting on more cash and cash equivalents from that. And then total long-term debt did nearly double up to $18.3 billion. So you want to see this number stay in check. You don't want to see Meta take out a bunch of debt in order to fund the metaverse. They certainly have well excess of cash flows. So don't really need to do this, but I think not a huge deal since this number still is small, but you do want to keep an eye on Meta's long-term debt. You don't want to have this number start to get out of control. Meta's balance sheet, basically bulletproof as it stands right now. From a cash flow perspective, $14 billion worth of net income, that turns into nearly $19.4 billion worth of operating cash flows in 3 months, over $70 billion over the course of 2023. You then spend a fair amount in property and equipment. Again, the build out of those AI data centers, certainly not cheap when they're looking to buy thousands and hundreds of thousands of those very expensive NVIDIA GPUs, but that is what you have to do in order to maintain and continue to accelerate those revenues and really maintain your lead and dominance in the AI space. And then on top of that, you have a ton of repurchase of common stock. So Meta really spending roughly around $6.4 billion in investing activities. And so that leaves them with right around $12 billion to then invest in financing activities in the form of buying back stock. Again, $6 billion in this most recent quarter. And then also starting in the next quarter, you'll see a line item that's saying the dividends that they'll pay out. That'll be part of their financing activities. On top of that, you still were able to add nearly $5 billion onto your cash pile. And so Meta just printing a ton of free cash flow, a ton of operating income, allowing them to bolster on roughly $27 billion worth of cash over the last 12 months onto their balance sheet. This company chugging right along, executing extremely efficiently. Basically, the year of efficiency worked out absolutely perfectly over at Meta. And for Mark Zuckerberg, really the best thing he could have done was exactly what he did. Now, from a stock chart perspective, the shareholders are absolutely rewarding the stock to do just that, as you see the stock trading closer to $450 in the after hours. This one had stalled out roughly at $400, did seem to make a few candles heading lower based on the, I think, backs of Google's advertising revenue, and that came in pretty strong, but I think not as strong as analysts would have hoped for, and so that kind of sent Meta's shares down just a little bit over the past few days. That really was a buying opportunity, considering advertising over at Meta is really not the same as advertising over at Google. Clearly you have a winner in terms of advertising. And I think that just really goes to show that consumers and really businesses are willing to spend their ad dollars on platforms that matter most. Certainly on a Snapchat, on a Pinterest, those advertising dollars will likely move to a Meta, as if they continue to honestly attract more users and really have a better bang for buck for those businesses. Why would a business choose to not advertise on Meta and instead go look to advertise on something like a Pinterest or Snapchat? So I think from an advertising perspective, this business is still essentially bulletproof, still the top of the top when it comes to advertising spend. Now, again, from a technical perspective, this has basically made a blowout top. You broke above your all-time highs, which were sitting at roughly $380 back in September of 2021. Now you're sitting well above that, close to $450. So wouldn't really be excited to jump into shares of Meta well above all-time highs. I think the excitement in the stock certainly carrying this one higher, and maybe can look to carry it higher over the next few days. But I think you will see eventually a retracement back to this trend line. This trend line likely can move up just a little bit. And so I'd say down here at $400, probably your first bet to look into getting into shares of Meta. And I think saying that the stock was basically there before the after hours move is a bit comical, but I think that is honestly your first level to get into shares of Meta. The results over at this company, absolutely phenomenal from a forward basis, not really trading all that expensive. It's basically trading right around 23 times this year's numbers, and consider that they just raised Q1 guidance, and profitability will likely also come in higher than expected. Yeah, this company likely trading somewhere between 20 to 22 times this year's numbers, not really all that expensive, especially when you compare it to its big tech peers. And so this stock, I think your first level is on a pullback close to $400. Any real major pullback, I think this one can head lower down to $350. We can likely move this line higher. I think a deeper pullback at that range at $350, that would, in my opinion, make a lot of sense to pick up shares of Meta. Certainly from a technical perspective, would still be in a pretty good uptrend, and then from a valuation perspective, would also come down in a meaningful way. When the stock has rallied so heavily, just know that it's not for no reason. This company is executing on all cylinders, and the numbers absolutely reflect that. On top of that, you now have a dividend and then continuing to increase their share buyback. Meta is really positioned in a great place to continue to be very shareholder friendly for the next foreseeable future. That was my take on Meta Platforms. When a company comes in and delivers staggering numbers, you have to give them their flowers, and that is what investors are doing in the after hours. Shares up close to 14.35%, north of $450. Let me know your thoughts on Meta in the comment section below. Congrats to any longs that have held shares of Meta really over the past 1 year. You have made an absolute killing in the stock, and you likely will as well tomorrow. Stay tuned on the channel as we cover more big tech earnings throughout this week, and then we have earnings from other major companies coming out next week. Be sure to subscribe to the channel to not miss those. Thanks so much for listening, and I'll catch you guys in the next video.